What's up, fellas?
What's happening?
Much. I love your tile there. Looks official. Can you hear us,
What's up,
Chris?
guys?
What's
yeah,
up, man?
my camera giving me a little difficulty, but I am back.
So, dude,
Beautiful.
break down the market wisdom for us.
Well, the Fed meeting was pretty bearish here. He basically said we're going into a recession.
Yeah.
The kind of couple zingers that he left off there was that the housing market needs to take a 20% correction. And what else did he said? He said something about like inflation expectations are low right now. So they need to do more now to fight inflation, to kind of get ahead of the curve. In a sense, once inflation expectations are like very high, right, then it's hard to fight inflation at that point. And then, notably the federal funds rate, the summary of economic projections last month, they basically missed all their expectations. So we're gonna, definitely go above neutral. And they expect the Fed funds rate to be 4.6 by the end of the year. And then for it to tick down next year at 3.9%, but definitely more of a bearish tone. And what else did he say that was kind of interesting? He said that in order for them to pause the rate hikes, this needs to happen. Job openings and job quits need to come into balance.
Jeez.
So
good luck.
Yeah.
What does that mean?
It's,
Job openings versus job quits.
So, and forgive me, I'm not like super versed in summary of economic projections, but it basically means that like there's like it should be more of like a 1-to-1 ratio where, job openings versus job quits. Right now it's like 4-to-1 or something. And it's basically something that's going to be a major problem. And it means rates are not going to be coming down for the foreseeable future.
No, I think we all knew that. But yeah, I mean, you basically have like, it was like like a record amount of people quit their jobs. And so it like the jobs numbers are skewed because it looks like unemployment is catastrophic when really you have this undercurrent of like people like you, Rob, for example. I mean, 2 years ago, you would have been a W-2 employee, and maybe you are, maybe you aren't, maybe it's a poor example, but like you have the whole undercurrent of the Door Dashers, the independent contractors, the personal trainer, like all these people that kind of quote left their job. And it's this weird signal that people are more comfortable with switching jobs, and at a time when economic uncertainty is at such a high. It's a bizarre juxtaposition for sure.
Right. Well, then a lot of people quitting too, right? The people that were,
people are quitting. Yeah, and job openings are through the roof. I mean, last time I looked, I think August numbers were like over 11 million was the job openings.
Wow.
But it still outnumbers the unemployed, which is always just kind of hilarious because, it's the way they want to. Anyways, it's all just verbal bullshit if we're being honest.
Yeah, they're always talking out of the side of their neck. When Jerome Powell said, "Oh yeah, inflation is going to be what is it, transient or whatever he said." Inflation's going to be a tranny.
Yeah,
but
which means you don't know what it is. So he was right.
Oh, that's funny.
Yeah. So I'm telling clients, look, like to think that he didn't know inflation was going to be running rampant is a total lie, right? They have all the economic resource to get the best financial advice. They had to know inflation was going to go crazy this year. And they sat there and lied to everybody, right?
Yeah, they knew it was going to go crazy. They just tried to stave it off for as long and make sure that nobody exited the arena.
Exactly, right? If they told everybody, yeah, all hell's going to break loose and we're going to have a war and a pandemic and, by the way, inflation's going to go to 9%, they probably would have had people running for the hills.
Could have been a bad idea.
Yeah, that is
But
weird, the managed decline. So, well, look, I know everybody's pressed for time. So, Chris, I kind of relayed to Travis what we had talked about. Let's get on the phone. Let's see if we can figure something out. There's going to be a move coming up here. Travis is always down for, an opportunity. And so, yeah,
why don't I share my screen? You gotta enable sharing. But yeah, Rob had basically said you were talking to him about maybe doing something. I know we briefly talked, and I just think, right now we have a cookie cutter set up for a really nice profit in shorting the market right now. And, I'm pretty much to the point where I can trade Bitcoin in my sleep. So I think we're going to have a really, really nice trade set up. And I will see if I can show you what I am talking about. Let's see, what screen do I want to share? I've got a massive screen in front of me here. So this is probably going to, I always tell people, or my sales guys, look, if they're used to making 5 or 10% a year, if you show them 40 or 50%, you're just going to scare them. But in cryptocurrency land, that's pretty much what you're working with is 80 to 100% volatility and some really big moves. So this is kind of the current trade setup I have going. I don't know if you can see my screen now.
Yeah, I can. Yeah.
Let me see if I can get the right chart up here, because I did just draw this out. There we go. So Bitcoin, we trade using, gosh, that looks kind of sloppy. Hold on. There we go. Work with me, screen. Here we go. Here we go. Trend, momentum, and volatility, right? So we're in a massive downtrend for Bitcoin. This is on a 5-day time frame. And basically, as soon as we get a wick below this prior wick here at 17,500, I think there is a very, very good chance we head down to about 10 or 11,000. And yeah, that's going to be a big one. But this signal, this 5-day time frame signal, I back tested it for 3 years and it's been, 100% accurate, believe it or not. And I can kind of show you what I'm talking about here, but basically, okay, let's look at the downtrend as it's going to make, let's see if I can hide this stuff. There we go. Prices making lower lows and lower highs going all the way through here. And this is almost a weekly time frame, but when we're making lower lows and lower highs on this higher term time frame, in general, the price is going to be down and sideways for anywhere from 12 to 18 months. So coupled with everything else that's going on, the high inflation, the rate hikes, the housing market is about to crash, or correct 20%, as Powell said. You got the war and these kind of 7-year cycles that all happen around September. The dot-com bubble, the 2008 bubble, go back to 1929, it all went down in September. But what am I trying to get at here? So there's a couple of, major things that are all in confluence with each other for that $10,000 target. But yeah, so here's the signal: trend, momentum, and volatility. So I don't know if you know any basic TA or you've seen any of this stuff before, but these are the stochastics. This is a momentum indicator. So when they're crossed up, the momentum is to the upside. And when they're crossed down, the momentum is to the downside. And volatility, this is called the BBWP. It's a Bollinger Band with percentile. And it essentially is measuring volatility. And when we get an extremely low read and we begin to get expansion, we expect the price to go in the direction of the trend. And you're probably like, why are you telling me all this? So, the last few signals in fact, every signal we've had where momentum is crossed to the downside and volatility begins to expand, we've seen the price go in the direction of the trend 100% of the time. And the last two cross downs, I'll just show you measuring this one here. I believe it crossed down from about that point right there. That was a 45% move down. This one right here was a 57% move. And, you know, we don't have all data, go back and back test it, but I'll just kind of mark off where these things cross down. So we got the cross down there, and it works to the upside as well. The average move, I back tested it all the way back going 3 years. The average move is about 45%. And it could be in any direction. You know, the volatility indicator is direction neutral. It just, when there's a low volatility in Bitcoin, that one thing we know, an explosive move is going to come, right? So whenever we get a period of low volatility, Bitcoin's very volatile. So we know an explosive move is about to come. But the average move is 45%. And if you measure 45% from where the signal just fired off, it crossed down right here. The move is going to take you down to 45%, takes you to 10,800. But this, and it's really there, you know, TA is a real thing. I know some people, I used to think it was just a bunch of BS. But if you take a measure move basically from these falling wedges here, it almost lines up to a T. If we break it down like that, and then you got this one right here. We had this falling, or it's actually a rising wedge, and from the high to the low, if you measure that one down, that one got you down to a T, right to that pivot at 20,800. And so these falling wedges have been playing out perfectly. And lastly, so the best signals come when all the indicators kind of line up, right? So not only do we have trend, momentum, volatility all in our favor, but these falling wedges, and then you've got the famous Fibonacci retracement tool, which measuring the breakdown from this is like the macro range that we had played out for almost a year and a half. From the low to the high, the 1618 fib is coming down all the way down to about $9,000. So
jeez.
I typically like to front run signals, and, you know, because everybody's looking at these levels, 10,000. So I'll probably take profits at around 10.5 ish. And so here's the trade setup. As soon as we tick below, this is how I'm trading my platinum accounts. My more conservative clients, you know, will do like 1x or 2x leverage. But as soon as this ticks below 17.5, I'm looking for a move down to that level around 10.5, 11,000. So I'll put a stop loss. That's our risk management at around 18,500. So if for some reason the trade goes against us, hey, we're only risking 5% to make 40% on this trade. And just a very good hit rate. So what I was telling Rob is like, look, let's get Travis on board. Normally our minimum investment for platinum accounts is 250,000, but I think if we show you the proofs in the pudding, very, very likely we're going to earn your business and maybe some of your clients. And I just think it's probably the easiest trade setup I've had all year long. And yeah, that's kind of where we're at. Bitcoin is going to go along with the NASDAQ and the S&P. And I don't know if you follow the stock market very much, but
yeah, unfortunately.
There's one other signal that I've been showing all my clients, and I was showing them this when this went off. back in June this year. This is a 6-month time frame. This signal's only happened 2 other times in history. Once was right here in 1973 ahead of a 10-year bear market. And so, yeah, that's a 6-month bearish engulfing candle. And then this one was 1973. You can see, I don't know if you know what a bearish engulfing candle is, but it's when the red basically takes out the prior wicks on both sides and engulfs the entire candle. It's only happened twice in history before this. The other time was 1929, the Great Depression, this guy right here. And that was a 20-year bear market. So hopefully we don't go into a 10 or 20-year bear market. But I got a minimum target back on the S&P down to this green box at about 2,200. And that, from where we're at today, and the market's come down quite a bit in the past couple of days, or past week or so, that's 40% down from where we're at today. And then we better hope and pray that that level holds. If it doesn't, you know, kind of the next level is going to be about 1,500, where we topped out in the .com bubble and in the housing crisis in 08.
Good gracious.
So if that's what's ahead of us in the stock market, in my opinion. And again, Powell said the housing market needs to take a 20% hit, a 20% correction. And, you know, God only knows what that's going to do to the stock market. And, yeah,
Because how many people's net worth are tied up in their houses, right?
And that's the whole point is, you know, Powell said in Jackson Hole, he said, there's basically, we have to, you know, inflict some pain in the markets. And the only way to do that is make people feel poor, right? How do you feel poor? Well, your 401k has got to become a 201k, and then you're going to stop spending so much. And you're right, most of the wealth is tied up in the real estate market. And so real estate goes down, stocks go down with it. And wow, I am killing it on a couple of trades right now, just so you can see, I know what I'm doing right here. I'm going to see if I can get this in my screen. I don't know if it'll let me drop another screen in. It's not letting me drop it in. Well, maybe this one, because I have so many windows open. There we go. So this is a trade for one of my personal accounts, not a client's account, but just a short-term little scalp for me. So I went short 3.2 million on Ethereum and about $500,000 short on Ethereum Classic. And I did this ahead of the meeting, because all my signals and Bitcoin. So Ethereum, just so you know, Ethereum during this last bounce, it ran up from 1,000 to, what is that, $2,000. So it was 100% gainer on Ethereum. And basic principle in cryptocurrency land is Bitcoin rules the market. So whatever Bitcoin does, the altcoins are going to do more. And, you know, that's to the upside and to the downside. So if this thing went up 100%, it's going to fall a lot harder. Bitcoin only ran up during this last bounce from this point to this point. It was about a 32% increase. And then Ethereum Classic, which is, I don't know if you know what that is, but Ethereum Classic is like the original Ethereum, believe it or not.
Oh.
It was the original, and then
Before they forked.
Before it forked. And so this one ran up 232%.
Jeez.
So there's more, and that was just from July to, you know, August, right? So I believe Ethereum Classic's at a minimum going to come back to about $14, and Ethereum is actually going to probably head to about 1,000. And then I have a longer term target of like 800. And then if Bitcoin heads down to 10,000, Ethereum will go to like $450. So on my own personal accounts, I like to, put a little more risk on,
Sure.
for clients. Bitcoin is like taking candy for a baby now, now that I've been doing it for so long. And, I wouldn't be risking my reputation. Like, I'm putting this trade setup all over social media, all over, everywhere, telling all
Yeah.
my clients, this is the plan. This is what we're doing. And honestly, if you had a trade similar to that and you said, hey, we're only going to risk 5% to make 40%, I would literally hop on that trade in a second, because it's a very low risk, high reward scenario. And those are the types of trades that I like to take.
Mhm.
And yeah, so hopefully that makes sense. And I'm not just talking like too
Talking
much
at your-
No, it makes
TA
sense.
nerd stuff.
No, it makes sense. I can appreciate it. My concerns are always, they go back to, liquidity, and then when are we taking profits off the table? So that's just something that we've done for so very long that's what we're accustomed to, but it also works from, 60% of what we do at this moment, is hard money, private money. And so, to have that available for any one of these developers that comes and needs it for mezzanine is super important to us. So those are the only two hiccups and hurdles, like I've shared with Rob. I don't think that there's any question in my mind or anybody's mind that you do or don't know what you're doing. For me, it comes down to, what does the investment look like, dollar amount, how long is it tied up for, and then how do we take profits if and when we take profits? So those are the three questions that I just need to wrap my head around.
So from what, Rob, what I was thinking for your account, just to show you we know what we're doing and we're going to make some money, is that we throw this on like a 2x levered trade. So we risk 10% to make 80%. And because 60 grand, I think he said you were working with about 60 grand. That's,
I forget how we got that number. Did you tell me that number, or is that something that
I'm comfortable with that number.
okay.
Yeah. Here's the thing, Chris, let me put it to you this way. The quicker that I can return the initial principal, the longer you can lock up the house money thereafter. Does that make sense?
Got it.
And
So
that's where you win.
And so what we had initially talked about is your investors are used to getting paid quarterly, right?
Uh-huh. Yeah,
And they're making about 5%.
Yeah, 20 points is kind of our annual threshold. Like anything lower than that, they're going to need to know why.
So, what if we could go, and because I'm basically at the point where I'm about to start a hedge fund, because I'm making, people so much money that it's ridiculous. And I could offer 30 points a year and then keep all the rest of the profits for the company, right? So what if we could just offer, 30 points for the year, and then, let them withdraw quarterly, and, start like that. And I'd be happy to do that. And with a 1-year lockup on the, initial investment.
Yeah, I think that's super easy to do.
So I think everybody could win there. And that was what I had been mulling over in my head over the past couple of days, or call it month.
Yeah.
Yeah, I think 30 points, and, we'll pay them out every quarter for the first year.
Yeah. Yeah, I think that's doable. On October, see, so 10th, 11th, and 12th. I'll be down there in Westlake. We're having an annual investors meeting at the Four Seasons on the
11th at 10 a.m. If you're available and around, it's probably something that you'll want to be at. There'll be a few guys in the room with B's behind their names, and everybody's looking for a deal. So we'll probably do dinner on the 10th. We've got the meeting on the 11th, and then who knows what happens after that. But I'm bringing some guys with me.
That would be great. I mean, we're right down the street, literally from the Four Seasons. I could walk there. Basically, it's literally right here.
Yeah, there'll be a few $1 billion in the room, so it should be a fun event. It's just our annual meeting down there for a few days. So it would be good to get you some FaceTime with some of these guys as well, because as you know, at this level, it's all relationship based. You know that.
Yeah. I just had a meeting with a guy who I didn't know he had a B behind his name, but he just, once we shook hands face to face, he, sent me a wire the next day. So
yeah, it's kind of a different story. There's I got a guy in the room. He's doing a raise right now. He's bringing in, it's $100 million raise at $2.5 million tranches. So he only wants to, bring in a certain amount of guys. So those are the people that are in the room. So I think it could be worthwhile for you, especially.
Absolutely. I'll make it happen. If, you said the 10th and the 11th.
Yeah. 10th will be dinner. 11th is 11th, the actual investor summit. So that'll be the morning of the 11th at 10 a.m. at the Four Seasons.
Okay, I'll be there.
Yeah, I think it could
And
be
then,
good.
here's the and you might think I'm a little wacky now, but there is, I don't know if you've heard of this thing called the have you heard of the Shemitah before? So it is like a
Virgin
Jewish okay. Well, it's like a Jewish holiday, not holiday, but it's like a month where going back to Babylon, like where God like basically wiped out all the debts, right? And there's so many of these events that happen September. Like I said, the greatest, drawdown in stock market history. I think it was September 23rd, 2008. And then the dot-com bubble was in September 1987. 1980 was when we got Paul Volckered. 7 years before that was the 1973 crash. So oddly enough, and I'm not, I'm not part of the Shemitah gang or anything like that, but the actual holiday, the Jewish calendar day is the 25th, which is a Sunday, October 27th. So here's why I'm bringing this up. This is odd. This is really, just shows how technical Bitcoin actually trades, but this is the weekly time frame. And exactly from the first drop down, this is 11 bars down. 1, 2, 3, 4, 5, 6, 7, 8, 9. That's the 11th bar. Trust me, I've counted it. And then it's 9 bars up, 11 bars down, 9 bars up. And if you go 11 bars down, that's October 24th, right? So that's when I suspect we'll be probably hitting this bottom in this green box territory. And there's probably going to be a massive bounce there, probably to the tune of 40 to 50%. That's what we've gotten on these last 2 bounces. So
dude, I think there's some big institutional players sitting at that level that are ready to pounce on Bitcoin if it wicks down like that, don't you think?
Oh, well, yeah, there's going to be a huge bounce here. And then I think the market's going to go down lower because there's no way the recession and all the inflation and all this stuff is over by October, right? We got to have capitulation, and that would, the next target down after we hit 10, we probably bounce to 15, and then we're going to come all the way down probably around $4,000 if I had to guess. And that's like the full retrace to the COVID lows here. This was, $3,800. And, anyways, I'm just saying this ahead of time, just in case it does happen. You can go, yep, that guy told me. He told me the Shemitah was coming.
The meeting's recorded, so at least you'll have it for, it'll be good social media content.
Yeah. So anyways, yeah, we'd be really excited to bring you on board. Just get you rolling with, 60K and then, show you, we put our money where our mouth is. And then I'd be happy to meet and come to the investor summit. I'd be totally excited to come hang out.
Yeah, it could be a good thing. Yeah. So yeah, I don't know how you guys typically do it, but if you could draw that up, outline it, and then, send me over wiring instructions and I can get that out.
Yeah. So I'll do the same contract for you, or no, it'll be, I mean, you tell me what you want. I'm willing to work with you. Because, again, this is like, we're going to make money hand over fist here. And 60,000 is, just toe tester, hopefully.
Yep.
But, it would be different if it would be different. So we're on a 2 and 20 basis. So here's what I would recommend for your account is a 1-year lockup. If you want to take profits out quarterly, I'm happy to do that for you. Or if you want to leave it all in there, it's up to you, but I could just have a meeting with you at the end of the quarter.
Yeah.
And then we could decide, hey, we want to leave it in there and keep it grow, or you want to pull some out. But then for your other guys, we'll just do it at 30 points and,
1 year.
Yeah.
Yeah. Yeah. That'll make it cleanest. Yeah. Do that.
Okay. All right. I'll get it drawn up as soon as I can. I will have my assistant send you over a DocuSign and the wire instructions.
Sounds like a plan. Appreciate it.
All right. Nice to meet you, Travis. Have yourself a great day.
We'll see you soon. Thanks, brother.
See you tonight, man.
All right.